So as always, I'd like to welcome everybody to today's presentation. My name is Sean Kozak. I am the CEO of Tickblaze. We are here to do an algo launch, and this isn't just another algo. I think this is going to be a conversation that many of you are going to resonate with, and I know I sure did, and I know many of us do when we start talking about volume, we start talking about price action, we start talking about divergence, right? And these are concepts that are used by a lot of traders. Like a very 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 large amount of traders adapt to volume strategies or using volume in the market. Divergence is like the most used concept when it comes to price and another variable moving in opposing directions. And then being able to take this information, combine it with price action, and turn it into a strategy that can be used for prop firms, right? Why do I say for prop firms? Well, because 95% of the entire industry trades for prop firms, right? And why wouldn't you, right? I mean, why risk your own capital when you don't have to? And so this is what we call volume divergence scalping or the volume divergence algo. And there is a big edge here. And I think that a lot of traders, once you see the simplicity of what the software is doing, you're going to really, really just see it. And a lot of traders have a hard time understanding strategies. This rule, this has to line up to get this signal to that signal. And it just basically confuses the hell out of people. And a lot of times traders, they're just trying to simplify. How many of you guys have ever felt that where you're just trying to simplify your approach and you're just trying to get down to like, just give me something easy, clean, and simple to trade so I can get up, I can trade it, I can do well, and I can just go on with my day, right? How many of you guys are in that wavelength right now? I know I am. Every single day I look at the charts, less is more. And, I think this is something that many of you guys are going to want to take a deeper look at because what we're going to share with you today is incredible. Plus, the results are great, right? So, I mean, who doesn't want better results? We're going to talk about that in just a moment. Okay. So, a couple groundkeeping rules. We do record these. You'll get a recording. We'll save our questions to the end of the presentation because obviously we want to get through in a timely fashion. If you do have questions and you feel a burning edge to just put it in the chat box, please do so. My team is here to help me. And then we will go through this in a chronological order so that we can basically get through here and get on with our day, right? There's lots to do today. So let's get into it. Now, because it is a trading event, it's important you guys understand that I am not your broker, your CTA, your money manager, your advisor. I am not here to promise you the heavens. Trading is a very risky business. It is very dangerous to risk capital you cannot afford to risk. It is also important you know that I am not here to give you advice or sell you something that you are not making your own decision to trade, right? Why is that important? Because the markets are a risky environment and you have to understand and accept those risks. Past performance does not guarantee future results, right? So can everybody do me a favor and just read that disclaimer and type a Y in the chat box so that you know that this is something you accept and you agree with. If you do not agree with this, please leave the event now because we cannot help you. Great. Thank you. Fantastic. So when I do these presentations, and this is the actual performance of this algo for the last 4 weeks, so it's pretty, we had one losing day. So that's great. Anyways, let's start with this. When I do webinars, I kind of take a different approach, right? I've done probably, I don't know, 250 webinars a year, times that by 10 years. You can do the math. I've seen a lot of webinars. I've done a lot of webinars. I've heard a lot of speakers. I've done a lot of speaking. Nothing bothers me more than bullshit, right? So I'm not going to read a bunch of slides. I'm not going to read the bullets. You can take screenshots. You can go through the presentation. What I like to do is I like to get into the information that actually matters. And then that way you guys can verify whether this is something that you guys want to participate in or not. Does everybody agree with that cadence? I want to make sure that we're all kind of on the same wavelength, or we're here to kind of keep it real. And, you guys are all traders. There's no wool over your eyes, so to speak, right? You guys understand the business. Okay. And if you're new, then you're in the right place. I can promise you this. This isn't a shiny object. This is not something that is here to like impress you. Trading strategies are about alpha. Trading strategies are about evidence, data. One of the reasons why we like automation is because it allows us to verify that data. And this is a strategy that can be traded instantaneously. This does not need a lot of fixing, a hand holding, or a lot of like education around it. This is something that is very easy, but it is something that you can trade as a fully automated system. And there is performance. We have done a lot of optimizations. We've done a lot of back testing. We've done a lot of relevance to the strategy. And we're going to talk about that today. Okay. Now, you're here for one reason, and that same reason everybody is here. And I always like to lead with this because if you're here to bake cookies, you're in the wrong event. Okay. If you're here to learn how to make as much money as you can, or at least learn new ways to improve your trading or use new strategies or new software to make that dream a reality, then you're in the right webinar. Why? Because many of you have spent a lot of money. How many of you guys have spent more money than you care to admit? Type a yes in here. If you guys have spent a shitload of money buying stuff in the financial markets, just put a yes in here. Okay? Oh yeah. Yeah, yeah. I understand. Okay. Now let me explain something. The amount that you spend does not equate to the amount that you will necessarily make in the markets. The whole point of this webinar is to try to tip the scale back in your favor. Okay. I don't like wasting time. I don't want you to leave here saying, well, that's another shiny object that I shouldn't have bought or anything like that. And I really, really want to see many of you limit the amount of struggling that you do on a daily basis. Why? Because health is precious, life is precious, and 2025 was either a good year for you or it was a shitty year for you when it comes to trading. There's no in between. You're either making the money you want to make or you're not. It's that simple, right? Don't let anyone tell you, oh, I've had a break even day. That's a shitty day, right? You're not making as much money as you want. That's the goal. How many of you guys would agree that every day you try to trade, you want to make as much money as possible? And it's our job to be able to do that to the best of our ability. Yes? That is our job as a trader. Just like if you're a roofer, you're going to build a nice roof. If you're a plumber, you're going to make sure things work, right? Whatever your job is, it's to do it well and to succeed at it. So if you're breaking even all the time or you're losing, well, then maybe it wasn't the best year. And this can be an opportunity for us to change that. And hopefully through this, we can do that. Okay. Remember, this is about a tool. This is about a strategy. And if I can move the needle using this with you, then I think that this is something you want to pay more attention to. Okay. Now, we're going to talk about algo trading. It's important, especially for people that need a refresher and also why it's so important. We're going to talk about the strategy and what it's doing. I'm super excited to talk about this because it's one of my favorite scalping systems that I've ever seen built. We built it on the NinjaTrader platform years ago. We had so many traders trading this because it's super easy and it's super simple. And we decided to bring it over into the platform. We just needed to wait for the right time to finish the coding. So we obviously have a coding schedule, and this is definitely it. Okay. Now we're going to go over the optimization and the strategy results. We've actually got a reversal set up and we've got a trend set up for this. We will give away a free license and we do have extremely good discounts. So everything here should be covered by the time we're done this presentation. Okay. Now, I want to talk about this for a second. I had a big conversation with one of my risk managers, and we were talking about trading strategies, and we've been trading a long time. I mean, you get two traders that have been trading. I've been trading for about 10 years, and he's been trading for about 12 years, and that's a lot of years, right? And we were talking about trading and talking about putting risk on and money management and scaling and all the different things. But it all just came back to data, right? We were just talking about like how many trading strategies have we ever looked at, learned, built, sold, used, traded? And you just go back to where the data is. And one of the things that I've learned with manual trading, and one of the things that I've learned with, the human aspect of subjectivity is that it's exactly the biggest problem, right? There's a lot of things that we do as a human that create breakage in our results, whether that's your emotions, whether that's hard to stick to a trading plan, whether that's, you're not back testing properly or the conditions are changing. And the truth is that you got to be on your game all the time. Well, guess what? We're not always on our game, right? You might have a great sleep. The next day, you might have a shitty sleep. And the next morning, you maybe feel like good. And the next morning, you don't. Maybe you're feeling sick. Maybe you're not going to be on your game all the time. But I can tell you one thing that if you turn a computer on and you program that computer to execute with specific sets of rules, you're not going to have those problems. And so when you look at the efficiency that comes from automation, it's not that we're trying to turn everybody into a damn robot. It's we're trying to make more money. And if there's a way for us to do so, then wouldn't that be a better way to run your business? Right? Like I get there's these SMC traders and there's these opening range traders and these order block traders and then there's these momentum traders. It's all just an approach. We can watch a YouTube video and we can watch this, we could buy a course and it's all the same shit, different pile. It all boils down to, are you able to make more money consistently and do you have the data? And one of the things that automation allows us to do is it allows us to back test and optimize the strategy performance. And why would one want to do that? Well, when you're trading manually, it's very difficult to do it effectively because you're subjectively looking at patterns and charts and you oversee things. Plus, it's really hard for you to go and put a big sample size of trades together as a manual trader. As an automated trader, I can go back literally in a few minutes or more and find 100, 200, 500 trades depending on the time frame I'm optimizing, and I have the evidence right there in my face to determine, yeah, I should be doing this or no, I shouldn't. Now remember, back testing and optimizing is not the future. But let me share something with you. Let me just pull up a drawing tool for a second. I just want to I can't help but do this. And let me just give me a second. It's very important we do this because if I have a trading strategy, right, and I'm not able to determine the historical trades and I'm not able to know how much money it made in the past, or did the edge have an edge, or was there anything that made sense? Versus if I actually turn on the back testing and optimizing of an automated strategy, and I'm actually able to see maybe it went up, maybe it went down, maybe it went up, maybe it went down, maybe it went up again, and at least I can actually see that what I'm about to do in live markets had some evidence of consistency. The problem with a lot of traders is they really don't know if what you're about to do tomorrow actually worked for the last 3 months. It may not work tomorrow, but did it work 3 months ago? And for the last 30 days or for the last 2 hours? You don't know this because you don't have the data to validate your thesis. Now, why would we want the data? Because it's all about belief. If you don't believe in what you're doing, your job as a trader is going to suck. It is going to hurt. It is going to be a costly, painful uphill battle that normally leads to a downhill slope. And so the only thing I care about right now is making you a better trader. And what's really cool about our automated strategies is that you don't have to run them as a fully automated system. Okay. You can run them as a semi-automated system and you can use them for signal generation and just trade them manually. It really depends on how you want, but at least you can provide evidence that the strategy actually had some merit. And that's more valuable than anything. You can't put a price tag on that because I just think that a lot of traders try to sell the sizzle and there's no data. Does that make sense, guys? Data is king, and data is what makes anything tradable. That's why all the big hedge funds have 90% quants and 20% admins. They're not hiring traders, guys. They're hiring quants. That's the reality. Like for every hedge fund or every big institutional desk, you got one or two traders, you got 30 quants. Now the quants aren't trading. The quants are telling the traders what to do. That's the reality. I know because I actually have had many conversations with the former vice president of Two Sigma, second largest quant hedge fund in the entire industry. And like we talk about this, and it's interesting that most people think the hedge fund industry and the actual institutional industry is what it is. No, it's not what it is. And why? Why are so much big money players using automation? Because it gives them an edge. They don't necessarily need to automate and trade it automatically, but the data is where the edge is. And so, does everybody understand why I'm so passionate about this? Because I actually care that those of you in here that are not getting the results can actually change that. How many of you guys would like to change your results? Just honestly. How many of you guys honestly would like different results, better results? Please just be real with me, right? Like as if I sat you down and we were just talking back and forth, right? Yeah, better. Remember, everything you've done up until to now is not a failure. It's not a waste. You're here because you want to get better. You want to do better. You want to have better. So if that's the reality, give yourself a break. It's not always your fault. In fact, I was having a meeting with a friend of mine. He's in here, Mr. Sharpshooter, and we were talking about how, everything you do, it brings you to your success through that journey, right? It's a path. And so if you're not where you want to be today, that doesn't mean you can't be there tomorrow. And I'm not trying to be some hocus pocus philosophy guy here. I'm just being real with you. Trading is a journey, and if you do make certain leaps and bounds forward, it will become better for you, right? And I'm here to do that with better data and the strategy. Okay, so let's talk about this. This is the volume divergence trade. Okay, what I love about this is it combines three things. It can be Renko or range. It can be range bars. Renko or range bars. You're using Renko or range, volume, and divergence. Okay. Volume, Renko, and divergence. So let me explain why we use these three components. It's really important you understand the trifecta here, that Renko and range are fixed bars. So if you have a range bar, the bar is always the same size. If you have a Renko bar, the bar is always the same size. This allows us to contain price action to a specific variable. If you have a time chart, or if you have a volume chart or a tick-based chart or a Heikin-Ashi chart, every bar is going to be so damn different that your stop sizes are so different and your fractals are different. It's a constantly variable environment. It's not healthy for algo trading. So why is because it allows us to contain, right, the wicks and the bars. Okay, does everybody understand that? So we're fixing the fractal because it's super important. It's super important you can contain price action on this because we're scalping. Tight stops, tight targets. Now, the second thing is volume. How many of you guys would agree that volume has an importance in trading? Yes, no, maybe so. Am I talking to myself? Yes. Okay. So let me explain something. You see all these white bricks inside of these bars? See all these white, like every bar has a white brick inside of it. You see this? We've done this on purpose. Is that let's say you have a bar here, okay, and it closes up, okay, and there was a wick down here. So take a look at all these up bars right here. Take a look at all these up bars, okay? You'll see that these white boxes inside the bars, what that is that's the volume cluster. That's the volume cluster, okay? And the volume cluster will often be in alignment with price, right? So you see the price going up, volume's going up, price going up, volume's going up, right? But in reality, there's going to be situations where price and volume don't work together. And that's normally it means when you get volume that is stuck at the bottom of the bar. When it goes down, what this means is that this bar tried to trade this way, pop, 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 pop. All of the volume got stuck here at the lows, and the sellers got squeezed out, and the price came all the way up, which means this was absorption in the order flow, in the volume, in the execution. Call it whatever you want. Volume is executed order flow. So what we're actually doing is we're looking for these really, really sexy bars, okay? And we're looking to use them in conjunction to two types of trading, trend trading or reversal trading, okay? You can have a trend, you get the pullback, push, boom, you get the bar that rotates with a volume cluster, and it gives you killer trades. You can see here on a downtrend, you get the volume cluster on the pullback, and it gives you a great push. Here, impulse move, pullback. The rotation had a volume cluster on it. And we put a VD, like the volume divergence here. The VD it says VD for a reason, volume divergence. And these are great trades. Why are they great trades? They're simple. You don't need a bunch of things on your chart. You're just waiting for price and volume to give you divergence. When price and volume go in the opposite way, it's normally an anomaly. Like it's actually an indication that you should get a reaction. Now, when we get these moves, I'm not saying it's going to go all the way up here. That's not day trading. What we're doing here is we're trying to get in right, on a clean entry and have little risk because normally you're going to get a reaction. You're going to get a reaction. You're not supposed to be swinging for the fence. In fact, if anybody's ever seen Moneyball, right, you get the baseball diamond, you get first, second, and third base, and you get home plate, right? Statistically, okay, statistically, this ultimately is where all baseball is won on first base. You just need to get base hits. Eventually, you load the bases, and the fourth base hit just puts you at a home run. Keeps putting things in the plate, right? This is nothing like the other scalping strategies, Eduardo. In fact, it has nothing to do with just price. It's all volume driven. This is a volume driven system. Yeah. We use price action to identify the divergence of the volume. Yeah. So nothing like the other strategies. Yeah. Very, very different. So let's explain this. Does everybody understand this? Is that a good breakdown of what this is doing? Here's a great example of how this works. So you can see here in a very, very clean fashion. Take a look at this rotation right here. There was a pullback here there was no volume divergence. It's a great example that you have no evidence that this was going to happen. Okay. And so when you get the pullback and you get a volume divergence trade, okay, this is critical. This is critical to understand why. This is not a Renko flip trade. This is a volume driven signal because we're identifying that on this pullback, the sellers got stuck while price went stronger above, which means there's normally going to be more follow through on the push. And that's important, right? If you're going to enter on a trade, wouldn't you want to see evidence that you have more expected follow through, especially if you're taking small stops and targets, right? You don't want to be in the market watching it go back and forth, back and forth, back and forth. You want evidence that's going to be some pizzazz behind that signal. Okay. Take a look at the shorts. Great example. Take a look. There's a pullback here. Okay. Nothing on that bar told us that this is a good short. And look what happens. It comes down and it rotates back up, probably going to take that stop out, right? There's a reason why this signal has a wicked amount of probability behind it, not because of the EMA. The EMA is there to tell us the direction, but that signal alone gives us a clear short because volume is telling us that the sellers, or excuse me, the buyers in this pullback are stuck. That is important. That is very important. There's no other, you don't need a whole bunch of other things on your chart. You don't need a bunch of other things here to kind of explain this. It's when the cluster peaks its head, that is a high probability indication that buyers or sellers, depending on the rotation, are stuck. And there's going to be a move to the other side. And that is important because that means there's a strong imbalance in volume, which normally means one side is losing, the other side has to win. And isn't that what trading's about? If you're going to be a seller, you want to see when the buyer's lost. That is the candle. And that's what the volume cluster does. And it's really, really easy to see on range and Renko bars because the bars are all the same size. So when it happens, you really, really see the evidence. If I got a minute candle, I mean, hell, that candle could be here and this wick could be here. And how do you know this bar is going to rotate? Right? You don't, right? We got one minute candles like this, and you got another minute candles like this. Well, how do you place your stops and targets on these bars? You have no contained risk. This is easy. I get a signal, I have a clear stop and I have a clear target because of the size of the bar. We're basing our stop loss based off the size of the signal bar and evidence that these stops and targets are really good. And that's the part of optimization is how do you know how big your stop should be? How do you know how big your target should be? That's what optimization tells us, and that's what we've done. Does everybody understand that? We've already got optimized templates for you. You don't have to worry about doing anything with this system. We've already spent the time doing it. Now let's talk about this for a second. This is what we call a signal. It's called a trading signal. Okay. And a trading signal alone is not good enough for me to want to trade it. I personally would never just trade a signal. If you came to me and said, hey, I got a great signal, I'm going to call you a liar because you haven't done enough work to prove the signal, right? What we do here at Tickblaze and what we did for the last several years is we built what we call an algo engine. And the algo engine is designed for us to take the signal, which is the strategy. It's 20% of the work. Why? Because everybody has a signal. There's always signals everywhere. But the signals are not necessarily the only thing that is going to give you the belief in what you're doing is profitable or it has expectancy or there's an edge in the past, et cetera, et cetera. So we built a custom application that is inside of our systems and it's for use inside of the Tickblaze platform. And we look at all of these variables that make up for the other 80% of why the strategy has merit. We look at your entry rules. We look at your stop loss size. We look at your targets. We look at when you should be trading it, your money management rules, any other filters like trend, momentum, slope, direction, structure. We look at all of these and we optimize. Why? Because I want to take this 20% signal and turn it into something that makes sense to trade it. Because you can have a great signal once in a while, but you don't know if that signal is going to last or if it's had enough history of working. Does that make sense? And so the goal of our algo engine is to take every single signal that we build and run it through all these filters. Like there's a lot of stuff going on in here. Like there's a lot going on in here. And this is why every time we do an algo event, the next day we follow up with an AMA. An AMA is an Ask Me Anything webinar with our development team. And what we do is we give you the pre-built template. We've already done this for this system. We already have templates. I'm going to show you the templates. I'll show you the statistics on the markets that we've done. And then what will happen is that you don't necessarily need to know all this today, but it's really good to come to those events tomorrow and we show you how we do it. We actually will walk you through setting up an algo. I think Jeff has plans to do it on the NASDAQ tomorrow. I'm not sure. Maybe the Russell, maybe crude. I'm not sure. But we did it on the S&P for this event. And then tomorrow we're going to teach you how to do it on the NASDAQ. Why? Because we can give you the fish today, but I really think that it's really good to know how to fill your gas tank up, right? You can buy a car and it comes with gas, but eventually you got to learn how to pump your own gas. And so what we do is we will pump your gas for you first, but then we also want to make sure you know how to refill it. And I think it's important you understand you don't have to be a master algo enthusiast or somebody that's super, super high tech in this, but it's really nice to know what the settings are. Now, some of these are all color settings and things like this, but there's some really, really powerful settings around your entry rules, right? Are you going with 1, 2, 3 entries? Are you going with 1, 2, or 3 targets, right? Your stop loss rules. Are you going to use ticks? Are you going to use distance? Are you going to use volatility, ATR? Are you going to use a break even stop? Are you going to use a trailing stop, right? Your targets. Are you going to use a fixed ratio? Are you going to use 1-to-1, 2-to-1, 3-to-1? Are you trading it in the US session? Are you trading it in the Globex session? Are you adding a money management filter, daily losses, daily goals, right? All of these things were built in so that we can verify that the strategy is actually really, really solid. And it's really user friendly. It's drop down settings. We go in a chronological order. We actually show you how it works. But remember, let me state this. It's already been done for you. So you don't have to worry about today, oh my God, I got to learn this. No, we've already built the templates. We already have pre-optimized settings for the S&P. Tomorrow, Jeff's going to do the NASDAQ. And you guys are going to learn this and you're going to see how valuable this can be. Okay. Now, like I said, I'm not going to read all the drop downs. I'm not going to read all the text. Take a screenshot of this. This is just, that's a typo. Sorry. It's a volume divergence. Right? So basically, you can take a look at this and you can see this here. Just this is ultimately just a list of everything that comes with the strategy. We don't need to go into all this, but I will tell you that it's important to know that it comes with a lot. Okay. There's a lot going on under the hood inside of the core engine, inside of the signal, but we'll go into that in tomorrow's AMA. Okay. Now, this is just what it looks like when you're trading it, right? Like it's just, you get really, really clean trades. Like there's no complicated things. Like you're not going to have to figure out this and that and that and this. It's just super, super clean signals on the divergence trades. Take a look at this one, right? Clean signals on the divergence. This is not using EMAs. This is just using structure, right? So it's really, really clean setups. Let's take a look here. Here's a great example of it. Breaks down below the EMAs, get a short, right? You can see the clusters. Like you can see up here, there's no clusters, right? Here's a cluster, right? And that's important. You see here going along, but you're going against the trend. So we would avoid that. We actually have filters to trade these volume divergence setups in the direction, can be very, very efficient. And if you are going to trade reversals, it has to be with the right context, and we have actual templates for that. Okay. Here's a great example of longs, right? We break above the EMA breakdowns. Like these are what we call step EMAs. So this is a step EMA, which is a volatility structure step. It's not just based on EMAs, it's based on structure. And as soon as we clear the structure and everything works, we get a really good volume divergence setup and a really, really great trade, right? And really clean trades. Like you don't take a lot of heat on these trades. Why? Because it's the right time to get in before the move happens. Take a look at this. Clears through. Really, really clean trade. No heat. No heat. That's the point. Volume divergence rarely, rarely, rarely flips against you because you're normally getting in when the other side is frozen or it's stuck. Here's a great example. Short, crossover, long. This makes sense? Give me a yes if this makes sense. I mean, tell me that's not clean. You get a red arrow and a short arrow. Like you get a green line. Like how clean is that? Like you don't even need this on your chart. Just the volume. Right? And that's the whole point is that we're using volume to get into the trades, right? So I want to share this. Like this is the trend setup on the S&P. So we pulled the stats. Okay, this is the trend setup. Okay, and this is the last month of trading, and it's taken 150 trades. Like this is something that I'm going to share. This is built for day traders and scalpers. Okay, 150 scalps in a month. That's a lot of scalps. Okay, and it's got an 85% hit rate. 85% hit rate. Okay. Which is incredibly solid. Like that's insane. With a two profit factor over 150 day trades. It's very hard to do that with scalping. Like it's easy to do that with swing trading. It's easy to do that with maybe a few day trades in a day. But when you start adding that many trades in one market in a month, to maintain a profit factor at that level, um, I'm sorry, guys, but like I've been doing this a very long time. And the more and more trades you take, the less and less your profit factor becomes because you're factoring in so much sample size. And I'm here to share with you, like, that's incredible results for an ES scalping system, right? And, Jeff, I think Jeff's here. I think Jeff's here. I'm not sure if he is. Yeah,
I'm
Jeff.
here. I'm here.
What's the risk on these trades? I think is like 350
Uh,
bucks.
yeah, so I mean it's either be like 11 ticks, 17 ticks, depending on which template you're using
Sure.
on ES and just how many ever contracts you're
Yeah.
trading.
Yeah, we're not talking large size here, guys. And we're not like I mean, in a month of trading on the S&P, this is last month. This is literally this last month of trading. Okay. Right. And so, I mean, I don't know about you guys, but even if you're trading an eval or in a funded account or even your own account, that's great. Okay. And that's the trend setup, right? That's not even the reversal setup. Take a look at the reversal setup. So the reversal setup, okay, is not as many trades, but wow, like 81 trades with an 87% hit rate, okay, and a 2.5 profit factor. So you can run these templates. You could run these templates in parallel, or at least turn them on and basically have trend and reversal setups happening because they're going to happen at different times. So if you combine the two and you ran the trend template and then the reversal template on the S&P, that's that yeah, sharpshooter says, yeah, these are impressive numbers. Yes, they're very impressive numbers. And you can imagine 81 reversal trades in a month. Okay, like look at the dates. This is the dates. Like this is what we ran this from. This is up to yesterday. Okay, this is up to yesterday. Okay. And realistically, you got 81 trades for the reversals and you got 149 trades for the trend trades, right? You do the math, that's 10, carry forward and going back to school here, that's 13. 9 and 4 is 13. Yeah, and carry the two. That's 230 trades, guys. 230 trades with an average win rate of about 85%. Okay. I think we're going for like a 1 to a point 0.5 or a 1 to like a point 0.6 or 7. I'm not sure yet, but it's within a 0.5 R multiple, right? Not going for swing. We're not swinging for the fences. We are going for out, out. Less time in the market. Time in the market is an enemy. The more time you're in the market, the more the market can prove you wrong. And as a day trader, you're better off going for base hits, getting on base all the time. Okay. Yeah, Dan says interesting. Normal continuation strategy have a higher win rate. Here it is reverse and both are high. Yes, fabulous. Yes. Well, let me explain something. Remember, going back to the trifecta, price action plus divergence plus volume, right? And that's the thing, right? You're looking at price divergence and volume all together at one factor, and you're not using this indicator and that's got to line up, and this has got to line up. Whoa, 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 right? Like it's not necessary. Okay. So I'm sharing this because, obviously, I really feel strongly about helping people, but, Jeff spent a lot of time putting the S&P template together. And, tomorrow he's going to teach you how he did that in the AMA. Okay. He's going to teach you how we did this, right? It's really clean setups. The goal is like, I always like to use the analogy if I'm a human being and I'm dropping a ball from the ground, if the ball hits here, there's gravity will always push the ball to the ground. But we don't know if the ball is going to go that way, or that way. But there's a very good chance it's going to bounce a little bit in this environment. And if we can basically, this is like me dropping the ball and it bounced a little bit. We don't know if it's going to go this way or that way, or it's going to go this way. Nobody knows this. But one thing we can do is how much evidence can we get out of a little bit of a push? If you learn to statistically build your business off of that instead of that, okay, then you can objectively quantify statistical alpha. And I'm not here trying to pull fancy words out. What I'm trying to tell you is that the more time you're in the market, the harder it is going to be for you to repeat that every single day. You're not going to get the same leg every single day. The market doesn't trend the same every single day. This is why you see more efficiency out of smaller moves. And if you can repeat that pattern all the time, you build a repeatable business model that can pay you. And that's why we're not trying to go for these massive, large trades. We're trying to objectively hit little teeny base hits. Okay. Jennifer says, will this ever be made into a strategy? It is a strategy. Our algos can be signal generators and they don't have to execute, Jennifer. So you can actually just turn the algo off and it'll just fire the signals. You don't have to execute. Yeah. Very cool. Yes. Yeah. So who wants to win a free license? Stupid question. I'm going to basically run a poll. Do we have a link in here, guys? Can Jeffrey or Pete or anybody here
Yep, I've
put
got
that
it.
in here? Thank you, sir. So great. Ken, I'm not sure, mate. I don't have it up. I don't have it up. I've been in meetings all morning. So we loaded the data since yesterday. It's as close as today as possible, but I'm not sure about today yet. I haven't looked. Did you guys enjoy that? Learn something about that? Keeping it simple, keeping it clean. Keeping it super simple, keeping it so clean. Yep. And so essentially, we're going to pull the numbers. Let me know uh, when we have a winner, guys. Yeah, let's just go back to this. This is what it'll look like. This is what it'll look like on your charts, right? Depending on the template that we have loaded. Um, I think, yeah. Augustin Madrigal. Are you okay if I teach you and everybody hears something from that? Augustin just made a great comment, and I think I can take his comment and I can use it to educate in a very uh, positive way. So let me explain something, okay? So a lot of you gotta first when you're trading a strategy, especially algo strategies, okay, and this is something I've learned over the years of building statistical systems, is that first of all, okay, it's not about how large the back test is, it's the sample size of trades that matter. So I'm a stats major. So what gives me qualifications to speak from this? I majored in stats. I went to school for stats. I understand coefficient of variance and statistical deviation and understanding metrics. That's why I gravitate to quantitative trading more so than manual trading. Okay. And so let me explain what I've learned over 10 years of building automated systems is that it really defines you first. If you are a scalper, your job is not to worry about what happened 6 months or a year ago. Your job is to worry about how many active trades do you expect the system to produce today and yesterday and the day before up to a certain amount of data. Why? Because what happened today is probably very, very different than what happened 2 months ago. And who cares what happened 2 months ago if you're trading on a four tick bar? A four tick bar moves seven ticks. Does that seven ticks have any relevance in any market condition that happened 3 days ago, 3 months ago, 3 years ago? Absolutely not. If you're a swing trader and you're trading 30 to 60-minute bars or 4 hour candles, yeah, you need to go back 6 months, a year, 2 years. Absolutely. Because you might get one, two trades in a week, right? Versus us getting 5 to 10 trades in a day. So I normally like to look at a rule of thumb for day trading 50 to 100 trades, okay, as a bare minimum. Anything over 100 is a gift. Anything less than 50 is a little bit noisy. Does this make sense? As a scalper, are you normally taking 50 to 100 trades in a month? Yeah, like that's a lot of freaking trades, right? If you divide 100 trades in a month, divide that by 20 days, right? Right? You can do the math, right? It's enough trades to basically build data around. So 20 days in a month, 100 trades, it's 5 trades a day, right? 5 trades a day times 20 days, you can do the math. So I really want to just use Augustin's comment. He's like, how many years have you gone back and done this? None. And I would never. In fact, it wouldn't even come up in our conversations because it's completely irrelevant. Does this make sense, guys? Hopefully you can learn from that. So if you're a day trader or a scalper, if you're testing signals, don't waste your time going back to data that's irrelevant. If you're a swing trader or an investor, absolutely go back months and years. Absolutely. It's all about the sample size. Okay. Thanks. Okay, we got a winner here. Winner, winner, chicken dinner. We've got who is the answer? Who is it? Who's the winner?
Bradley Francis is the winner.
Bradley Francis. I know Bradley Francis. I've had conversations with him in the past. Congrats, Bradley. You are the winner. Where is he? You're here, Bradley. You won the algo, brother. It is your lucky day. Congratulations, mate. Give him a round of applause. Everybody deserves to be congratulated when Lady Luck is on his side. And hey, everybody deserves it. So let's go into this. Thank you for being here. And as always, just thanks for your participation, your business, and everything in between, traders. A bunch of you requested callbacks, so Jeff will definitely take a look at that. And yeah, guys, big shout out to our dev team, Jeff and the guys on the back end who make this a reality. So big kudos to them. Everybody give a big thank you to Jeff on the back end for all of the optimization that he does and all the work he puts in because, without these people, none of this stuff would be possible for you guys. So and also all the educators, Jeffrey, and all the people on the behind the scenes. If it wasn't for them, we wouldn't even be able to be here. So hopefully you guys found value in the presentations and yeah, volume divergence, right? Looking forward to seeing you guys crush the markets with it. Take care, traders, and we'll see you guys in the AMA. Take care.